The rescheduling of cannabis from Schedule 1 to Schedule 3 and the introduction of a Safer Banking Act are reforms that are in discussion with you being implemented very soon in the US. And this is going to allow cannabis companies to trade just like any other company. And so with that in mind, the Department of Justice have even stated that this could radically change or radically transform the cannabis industry and transform it into a multi-billion-dollar industry. And so in light of these changes, a cannabis ETF called Toke, it's run by Cambria, recently brought on Aaron Eidelheit, who is an investor. He is the CEO of Mindset Capital, and he has been appointed as a research consultant for Cambria for this ETF. And so Aaron Eidelheit has been a huge proponent of investing in cannabis. In particular, he's mentioned two cannabis companies that are really innovating in the space. They are Grown Rogue and Glasshouse Brands. I've done separate videos on both of these companies, and I absolutely love both of them. The leadership, the business strategy, they're very, very innovative. Both of them have a unique service proposition and a moat as well. And so I came across Glasshouse Brands and Grown Rogue through Aaron Eidelheit. And it's probably been a year since I've been tracking these companies. And since this year, Grown Rogue is up 228%. And Glasshouse Brands is up 169%. And if you're interested in finding more, I did some very in-depth videos on both of these. You will have to be a little bit patient. I apologize. They may be a little bit long. I'm conscious that people like things short. And so if you do want to look at those videos, it's probably best to watch them a couple of times or stop when you're tired or bored and just come back to them, because they are very in-depth. It's pretty much a cross-examination of these business strategies of both of them. I'll link them in the description below. Both of these companies have some of the highest quality cannabis, which is rated, top 3 in certain states, and they're selling it at the cheapest price. And so they're beating the competition on quality and price, to the point where Curaleaf, who are one of the biggest companies by market cap at 3.5 billion, were forced out of Oregon because they couldn't compete with Grown Rogue on pricing. And Curaleaf were also forced out of California because they could not compete with Glasshouse Brands. And so this just highlights the fact, right? You're looking at a company, Curaleaf, that has a market cap of 3.5 billion and is trading at 5.4 Canadian dollars. And yet it can't compete with Grown Rogue International, who are priced at 82 cents and have a market cap of 124 million. Glasshouse Brands are trading a little bit higher at over $8, and their market cap is at over 500 million. And so this just serves as an illustration, when you're just looking at the basic fundamentals of a company, of a business. You have two companies here that have a significantly lower market cap, that are overthrowing a Goliath of a business, and it's purely based on a basic fundamental, which is that they're offering better quality cannabis than Curaleaf, and they're offering cheaper cannabis than Curaleaf. And so not only are Grown Rogue and Glasshouse Brands selling some of the highest possible quality cannabis in the US at the cheapest price, but they are not even halfway through their growth strategies. You can see up on this map, this is a map of Grown Rogue and where they are right now with their expansion. You can see that they've got 3 states where they're operating independently and 2 others where they're in partnership with another cannabis company called Goodness Growth. Now, I've watched numerous interviews with the owner, the CEO, the guy is called Obi Strickler, and he's mentioned that their overarching strategy is to get into about 10 to 12 states. As you can see right now, if you include the partnerships, they're only in 5 states right now. So they're not even halfway through their expansion strategy at the moment. And so obviously, with expansion, with the growth of a business comes an increase in the overall value of the company as well. What might this do to the value of the stock in the future, compounded by the rescheduling of cannabis from Schedule 1 to Schedule 3 and the Safer Banking Act? These are all kind of catalysts that all combined could really, from my perspective, just my interpretation, could really see a substantial rise or a continued rise in the stock price.